In today's Forex Midweek Outlook, I'm discussing the DXY, the Euro, the Pound, and also gold. So before we get started, if you do want my help with your trading, including real-time market updates, seeing my trades live, and also VIP-only videos plus the full course, be sure to check out the link in the description of this video for 85% off lifetime access to VIP. So the group is hosted in Discord. I'm in there every single day, helping out members and providing market insights and also sharing my trades live. So I'm so confident that you're going to benefit from it that I'm willing to give a 7-day money-back guarantee. So if you join and you don't love it, just contact me within 7 days and I will refund every penny, no questions asked. Okay, guys, so let's take a look here at the DXY. And this is actually my second time filming this video today because the first time I got done and literally minutes later, we had the drama, about Trump trying to fire Powell, or at least supposedly firing Powell. And then, of course, those comments were walked back. So here we go. This has been 2025, guys. This has been happening all year long, it seems like. And so it's just more of the same. But the market changed pretty drastically following all of that drama. So I wanted to re-record this for you guys just to have the most up-to-date data. So looking at the DXY here first, we have these lows from 2011. We've talked about this channel before. And this is really the key for the July price action so far, and also even today. Okay, so right here, this level comes in around 97.70. We've talked about this before. And looking at the daily time frame, this back here, just to kind of point this out, this was a trend line that we also discussed for weeks here on YouTube and the website. And I told VIP members, this is the benefit of being in VIP, that back here on July 10th, this candle right here, this green candle, this was the very first time that the DXY closed above this 2025 trend line all year. And I told members that that could be significant and provide some bullishness for the US dollar, because you can see the back here, even though the DXY tried, it never actually closed the day above. So you can see here, this candle is the one that broke above it. And of course, since that time, the DXY has been relatively bullish. Now, today's events, okay, look at this candle here. This is the drama that we saw here so far today, and it's unfinished. And what I mean by that is that we still have several hours left in today's candle. So this could really, with the way the market's been, guys, this could close right back above here and still continue to look bullish toward these range highs around 99.35. Okay. So this, in my opinion, is, following the reclaim in 97.7. And by the way, this is the level I've had on my chart now for a very long time. You can see that today's low was right off of that. Literally right off of 97.70. So this right now, guys, is what I'm looking at here for the DXY. I think where we close today relative to this mid-range back here around 98.55 or so, these lows back here, you've got this high, you've got these lows. This is the 50% essentially of this range back here for the DXY. Now, typically when you get high time frame reclaims like this back here of a range, it makes this down here a failed breakdown and you get that push higher, okay? Now, we've seen the push into the mid-range, and so far that is serving as a bit of resistance here today. However, again, what's going to be key for the DXY is where we close today's session relative to this area back here, because you can see that on Tuesday, it does kind of look like the market, closed just above that mark. Now, it wasn't convincing. It was just above this area back here. So it could still be resistance, but I do think that where today closes in relation to that area around 98.55 is going to be key for what we get for the DXY in the coming days. Now, one thing to be aware of too, if we take a look here at the 4-hour, is, clearly an uptrend since the low back here in July 1st. Okay, so ever since July opened, right, this market has been trending higher. Now, we do have some sell-side single prints. And by the way, I don't know if you can hear that, but that's actually thunder outside, which is kind of fitting for today's events. But anyway, we have these sell-side single prints down here around 97.60 and 97.50. Okay, so in TPO terms, essentially what that means is that you have these imbalances back here, okay, following the run-up. So you had this expansion here, this expansion on this candle, and no retrace into these. So if we see the DXY close below here today and continue to pressure this area around 97.70, then areas like this could become a factor, where we see the DXY come down here and sweep these before potentially bouncing, okay? But again, I think that today's close is going to be telling in terms of where the US dollar goes over the coming days. Now, one last thing here, guys, going into the weekly close this week, what's going to be key for the US dollar index here is with this range, okay, where the market closes relative to around 97.70. As long as we're above this mark, guys, I think that it's dangerous getting too bearish on the US dollar, simply because we do have it reclaiming this on a weekly closing basis, right? Last week closed above it. And furthermore, we have the euro and also the pound still breaking down, despite today's movement, okay? So we'll talk about those next, but I think that 97.70, this area down here is the one to watch. Just keep in mind though, again, we do have those sell side imbalances just below that mark that could become a factor depending on where we close today. Okay, so let's go ahead and move on here to the EURUSD, guys. And if you are enjoying this content, be sure to subscribe to the channel and hit that like button because it really does help out these videos and I appreciate it as always. So looking at the EURUSD, we have it breaking this May channel that we've talked about. And really, if you guys have seen recent videos, you know that I was getting bearish, relatively bearish on the euro, even at the July open, simply because we had the euro opening right here at the top of this channel. And furthermore, June was very bullish. However, the market also got a little bit ahead of itself here, and you saw several sell-side imbalances form that I've talked about in recent videos. So, I mean, so much to the point that I was actually getting short as announced in VIP because I announced all of my trades in real time in VIP. I was getting short the euro through here, stop loss above the highs, and my first target was down here at the lows, took 50% here, took 50% there on Monday because there was a sell-side single print down here that we've talked about in previous videos. Now, as far as sell-side single prints, guys, let's talk about this one down here too that I've also shared in recent videos. In fact, just yesterday, I talked about this, 115.65. This was a single print from back here. Okay, so we've discussed this a few times, but you can see that this right here, this expansion out of the range, right? Range on price action, expansion out of it. We never saw a retrace down here. This was a single print at 115.65. Now, these are often targets. However, they can also be support or resistance. And it's no coincidence that we saw the euro here today bounce right from that level. Okay, so this just goes to show you guys that even in the face of volatility like we saw here on Wednesday and uncertainty like we saw on Wednesday, technicals still matter. Okay, so what I think this is going to come down to here for the euro, you can see a long upper wick here on this 4-hour candle, and the pair did retest the bottom of this channel. Okay, so we saw the breakdown earlier this week, and today's rally up here was just a retest of the bottom of that channel. Okay, so for now, this area down here is going to be support for the euro. However, not something I would try to buy, certainly not with the DXY reclaiming 97.70 last week. Obviously, if today closes below here and we see the DXY close back above that area that we talked about, right? 98.55 or so, 98.56 in that area, then that would be bearish for the euro down here toward this pocket that we also talked about in yesterday's video. So I'll cover this here quickly in case you missed that video. But looking at the 3-month time frame, we're going to go all the way out here to a 3-month time frame. And the way we get pricing data prior to 1999 when the euro started is that all of this back here is a pre-euro basket of currencies. So what's fascinating is that we have this ascending channel here off of the lows from 1985, a very long-term channel. And you can see where if we look here at the last few years, okay, this has held up incredibly well. We had the euro breaking down back here in 2022. Okay, so we had the breakdown back here. We had the retest as new resistance here. Obviously went sideways for a while, swept the lows, and now here we are above this level. And this is why I said in yesterday's video that the area around 115, maybe just above, is going to be critical, because if we take a look at the weekly, this level right here is essentially that trend line or the bottom of that channel going back to 1985. So a 40-year level, guys, down here around 115. June closed above. That was also a quarterly close. So with that close, guys, this is going to be key support. Now, again, we don't know if the market's going to get all the way down here. For all we know, this here today, hitting that single print down here could have been the retest, okay? I'm not saying that it is. I think that this is kind of one of those conditions, guys, and we talked about this in Discord just a little bit ago. But I think that following events like we saw on Wednesday, in my opinion, it's best just to stand aside and let the market figure itself out, see some follow through one way or the other, instead of trying to make snap judgments based on what we're seeing here so far today. That's just my own opinion, of course, but that is the way I would approach this market and really any market following events like here on Wednesday. So for the euro, guys, this is going to be a must hold for bulls down here, right around 115, maybe 115.30. But again, we are seeing the market bounce, pretty considerably from that single print down there that we talked about earlier. Okay, so like I said, I think that this is a wait and see market right now. I mean, you can see here with this range, right? We could spend some time here within this range because a lot of times when you do see wicks like this, you tend to get the market, filling in this area up here, potentially filling in the area down here, and just kind of ranging here for a bit, especially with all of the uncertainty out there. All right, but at the end of the day, though, guys, I mean, really, as long as the euro is below this level here, that May channel bottom, then we are technically bearish, potentially down there toward 115, but we'll have to wait and see how the DXY closes on Wednesday. Now, looking at the pound, similar situation here for this market. I mean, we talked about this before. I'll just kind of go back here and recap this a little bit. But looking at this trend line here, these were yearly highs. So we had 2023, 2024, the market struggled with it through here, broke above, closed back below. So what I said a couple of weeks ago is if you were looking for a short here on the pound, this, in my opinion, was it. So right through here, guys, resistance through here, we got the break above. You can see close below, retest as new resistance. That was your short. And this is what we talk about in the course. This is called a fake out here on the high time frames, where you get the market breaking out, closing back below, and then selling off. Okay, so perfect little setup here for the pound. And so far with this week's price action, we are seeing the market bounce from these lows down here, right around 133.80 all the way up to about 133.15, or I'm sorry, 134.15. And we have a few things happening in terms of imbalances. So first of all, we have, obviously anything below this range down here, if we get the pound, closing below here today, then we have these sell side single prints down here. Okay. Now we also have these range lows from all the way back here in May and even before that, right? So this could become a factor as well. And these probably line up with the DXY around those highs around 99.35. Okay. So that's going to be significant to keep in mind that if we see it, the pound come down here, the DXY is probably at 99.35 and we probably get some kind of bounce. Now, the big question though for now is, will we get the DXY coming down here, okay, to fill in these single prints down here, okay, to clean these up before we get a bounce? If we get that, if we get the DXY coming down here into this area, right, and then bouncing, then that could equal the pound coming up here and taking out this buy side single print that's formed during this sell-off. Okay, so once again, we have this big red candle back here, and the market never retraced into this area. So you've got all these lows back here. There is a single print, a buy side single print right around 135.25. So whether or not that becomes a factor is going to depend a lot on where the DXY closes today. But if it does, then we could see something where the pound just ranges for a bit here, and then we get that push up here into this area, and then potentially from there, we get the sell-off to target these areas. Now, of course, it could be the other way around. We could get the market coming down here first. Like I said, it's going to depend on where these markets close here on Wednesday. And again, like I also said, that I think that times like this, guys, if you're not in a trade, this is not the time to be putting on trades and just shooting for the fences, right? This is the time, in my opinion, to just kind of stand aside and let markets figure themselves out. But for the pound, I mean, really, when you look at this here, when you zoom all the way out, the pound did close below here on Monday, close below its 2025 trend line here off of these lows. So as long as we're below this area, again, I see no reason to get bullish on the pound. Now, whether we get bearish here and see them move down here in this area, like I said, that's going to depend on where the DXY closes here over the coming hours. All right. So a lot of uncertainty out there with these markets following Wednesday's events. So let's take a look now at gold, which did obviously have a lot of volatility here on Wednesday. And that's no surprise because it is a flight to safety, and gold tends to do extremely well when it's facing uncertainty like that. So for gold, guys, let's talk about this here for a moment, because I've talked about this a couple of times. And the fact is that, yes, we do have a long-term uptrend. Okay, we have a long-term uptrend going back years. And one thing that I find interesting, though, and I'll talk about this first since we're here, this trend line here that you see off of these lows, this goes back to 2024. Now, what's interesting about this is that this down here was the 2024 low. If we then move over, what you'll see is that the next lows through here, this was actually the 2025 low, this candle right here. So we have a 2024 low, we've got a 2025 low, and currently gold has not been back to this since the start of the year. Now, obviously no guarantee that it does. It could just consolidate here and then take off higher without testing this. But one thing that's interesting though is that where this comes in here over the coming weeks is right down there around that unfinished auction that I've talked about around 31.54 that could get swept. And also we have this, sideways market so far, right? So since April, gold has been sideways. Yes, we have a macro uptrend, but for the most part, the market has been sideways. Now, the key to this, okay, is where we go following Wednesday's events. Because, before those events, right, everything was looking pretty good here. In fact, before those events, gold was actually once again pressuring this area down here. Okay, this key support around 33.22 that I've talked about in recent videos. So it was looking pretty good, right? We had this 4-hour downtrend. The market was once again pressuring support. Of course, we had the reports come out, about Trump and Powell and all of that, all the drama. You guys know all about it, I'm sure. So that obviously took the market back up here toward these highs. Now, the key to this, though, what I've talked about in recent videos, is that the only thing that would negate this downtrend that we've seen here over the past few weeks and the potential for lower prices is a sustained break above 33.70, okay? And this right here was not a sustained break. This was a wick above those highs, okay? So as of right now, guys, I still have my short trade on here. Now, I did also short the euro earlier in the month. Like I said, took that off for over a 3-hour profit. And I'm also short the S&P 500 that is also currently in profit. So, doing well. I don't really mind if I have to take this off at break even or even just worse. But we'll see where we close the day. I mean, I'm not going to rush into anything right now or make any snap judgments just because these markets have been very volatile, and it's all going to depend on where we close the day and also where we go over the next 24 hours. All right, so no issues here. If I have to get out in this region, if gold continues to pressure this area, then the bearish idea is obviously off the table. However, like I said, 3370 is the one to watch. If we get a sustained break above here, then we're looking at that pushback there towards some of those recent highs, okay? So you've got highs like this back here around 3430, right? These highs back through here. Now, obviously, if we get the rotation lower and the market were to take out levels like this down here around 3322, then you've got areas like 3284, etc. Okay. But for the most part, guys, range bound market, very volatile, very uncertain. So just be really careful. Like I said, I really, really don't think, guys, that right now is the time to be entering into positions and making any snap judgments when you have this kind of volatility and this kind of uncertainty out there. Everything from gold to the dollar to the stock market right now is very uncertain. So just be really careful out there. Again, I am still short here, but we'll see how it goes. This is not something where I'm just going to sit in it and wait for it to come up here and take me out. My stop loss, guys, is way up here. My stop loss is well above these recent highs. But my mental stop, my soft stop, again, is an invalidation, is a sustained break above 3370. Okay. So we'll see what we get here from gold. I mean, it has been trending lower. It has been going sideways since April, but it's also in a macro uptrend. So very interesting to see where we go here on gold. Guys, if you enjoy the content, if it's helping, be sure to subscribe to the channel, hit that like button to show your support. And don't forget to join us in VIP. Check out the link in the description of this video for 85% off access to the Discord group and also the trading course. Trade well out there, be careful, and I will talk to you again tomorrow.